How's it going? How's it going, fellow traders? It's 12:30 p.m. It's February 27th, 2023. Thanks for joining. Glad you could make it today. You know that we've been waiting the last few weeks for some CFTC data to be released. They just halted the release of data for the last 3 weeks. And not quite sure what's going on there or why they've paused, but they gave us some excuses, which we don't know if it's true or not, or what's going on. All we know is we haven't been getting data. And this past Friday, they finally released some data to us. It's like, here's some bones for you to work on. It was the data that we were supposed to get on the 3rd of February. They gave it to us on Friday. But nonetheless, it doesn't mean that it's not valuable, okay? Doesn't mean that it's not valuable. I think it's very valuable. And it's just putting an extra piece to the puzzle that we were already putting together before they stopped releasing the data, okay? So if you go back to the sessions that we did before, you'll see the picture that was being painted with respect to the dollar, the markets, gold. We were starting to see clearly what was going on and what the institutions were doing, okay? So we're going to dive into that today and take a look at what this latest set of data is telling us, okay? All right. Hit the like button if you get a chance. I'd appreciate it. I'd like to see at least 50 likes today, okay? Very good. Okay, so let's take a look at gold. So the January 31st data, okay, that was the Tuesday leading up to February 3rd, all right? Here's the latest data that we got. And what do we see? An increase in long positions. So as you can see clearly over the last several weeks, there was a consistent push to increase long positions. They were at 229, 230, 243, 246, 253, 256, consistently going up, okay? What about short positions? Were they focusing on shorts? 92, 89, 93, 93, 95, 96, okay. A small, slight increase in short positions. That was to be expected, all right? Because if you remember when we were looking at the data, and looking at the technicals, what did we figure out? Price is in the range, okay? Demand zones being removed, supply zones being removed. The last area that was created was this area here. That's an institutional buying area, okay? What do we mean by that? Well, that's the last area that the banks were buying. When we look at the CFTC data and we examine what were they doing at that spot, and we do the technicals, we've determined this area was the area where the banks were last buying. Okay? Why is that important to us? It's important to us because we want to know if we want to, first of all, partake in either going long or short on an asset. And whether we decide long or short, we have to know where it is that we want to enter in the trade. We don't want to just enter in blindly because we want to know, number one, it's an area where the banks want to enter, and the banks want to enter there because they want to push price in a certain direction. That's why we get involved in trades, okay? So the latest area based on the monthly chart is this area here, 1690s and 1614s, okay? That's where they were last buying gold. All right, so price came to the top of this range. What was there left to do? I mean, there were no upward trends here, nothing to sustain price in an upward direction. So what was left to do was a drop in price. Okay, so we were expecting that. And so if gold drops, what will likely happen logically with the dollar? A rally, correct? Okay. And the euro would what? Drop. Okay. So that is what we're getting. Okay. And that is what we're seeing. But going back to what we're looking at here, what's the overall picture being painted here? Is that there's an increase in long positions that are being acquired, okay? Consistently. So much so that their position on longs up until January 31st has been above average. Shorts are below average. So that tells us momentum is shifting for longs. All right, so price drops down, and now we can see on the weekly chart, it contacts a buying area. Okay, so we locate buying and selling areas on different time frames. Why? Because it's important. Because depending on whether they're creating a buying area on a weekly chart or a monthly chart or a daily chart, if price comes into those areas, we have a good idea of how much momentum we should expect from those areas. Should we expect short-term momentum, medium-term momentum, or long-term momentum, or very long-term momentum? And that allows us to plan our trades, enter into a trade, and know how far price should move away from our entry points so we can select targets. So I mentioned that this is a medium-term buying area that price is coming into. So what does that mean? That means we should expect some movement to the upside to take place. Okay, let's take a look at a live chart of gold. What do we see here? Okay, you see the upward momentum kicking in slowly? Okay, that's not by chance. Okay, that's by design. And last week I posted on Twitter, I said gold reversal to the upside is what I'm expecting early in the week and leading into the week. And so price dropped right into this buying area, and now we see the bullish momentum. This is the banks buying. Okay, now I wish we had the latest set of data because it would give us a lot better idea of what was taking place as price was dropping. So typically what we would see if it was approaching a buying area like this is we'd see the banks starting to accumulate and push a little bit harder with their long positions. Now, we don't know if that's what's been taking place. We know up until the end of January that's what was taking place, but we're near the end of February right now, and we don't know if they've continued to do that throughout the weeks. What I can say is it's definitely clear that they were adding to their shorts. That's why price got down here. So now it becomes really, excuse me, it becomes really important to watch the lower time frames, okay? Because we see this bullish push to the upside, but we don't know how long this is going to sustain itself. So at this point, we'd like to look at the lower time frames and see what kind of momentum is going to start to be built from here. All right, we go to the 4-hour chart. What do we see? Downward, okay? Down, down. Is this momentum to the upside? No. Do we see some buying taking place here? Yeah. But how long is it going to sustain itself? We don't know. So what we'd like to see is some kind of movement out of this downward structure to become more neutral. Okay? And then after that, we'll see whether or not it wants to become bullish. But right now, it's in bearish territory. Okay? We're starting to see the buying, but it's still in bearish territory. But let's remember, we're dealing with higher time frame moves here. What do I mean by that? Okay, going back to the data, look how long it's taking them to accumulate this position. Okay, look back in December. We have positions here 211. December 6th, okay, last year, December 6th. All right, so that's all of December, all of January, and now we're into February, 3 months, okay? So this is not something that, you know, is going to take a small amount of time and then there's going to be a move. This is something that they're accumulating over a long period of time. Now, typically what happens when the banks are accumulating a position over a longer period of time, that means the move that is going to take place in that same direction is going to take place over a longer period of time. Okay? So it's not just going to be a little bump to the upside and then a continuation of a move to the downside. They wouldn't be accumulating such a long position if that were the case. So longer term, our bias is gold heads higher, okay? And that's because of a couple things. The technicals are telling us that, and the CFTC data is telling us that. Now, this coming Friday, when they release the next set of data, we're just going to add another piece to this puzzle, but the puzzle is telling us that longer term gold is going to be heading higher. So you automatically know that if gold heads higher, the dollar has to drop, right? What does that mean for the markets? if the dollar has to drop, what does that typically mean for the markets? That they're going to rally, right? Okay, but here's the deal. I posted this chart on Twitter. You should look through my feed if you haven't seen it. It's a correlation between the markets, the SPY, and the dollar. And there are times where they become positively correlated. Right now, they're negatively correlated, but there are times where they become positively correlated, and that's when the dollar is making some key reversals. And I believe that the dollar is in the process of making a key reversal right now, right? I don't know if let me just see if I've got it. Let's see if I can bring it up for you. Here we go. Okay, this is what we were looking at. I want you to pay attention here. Because right down here, this is a key reversal from going down to going up. During this key reversal, look, positive correlation. What does that mean? That means the dollar moves up, the market moves up, okay? And so you see this becomes negative. This is because the dollar was heading upwards while the market was heading downwards. So it became negatively correlated, all right? But I am seeing this as being a top in the dollar, okay? That's what the data is suggesting, and I'll show you that. I'll show you the reason for that in a bit. But the technicals are suggesting that as well, okay? Now look, negative, headed down to the 0 mark, okay, or headed up, and look, all right? I believe it's likely going to do this. Why? Because if gold is going to rally and the dollar is going to drop, I also suspect that the markets are going to be dropping too. Okay, it's going to take some time. It's not going to be something that's going to happen very quickly, but it's going to happen. High degree of odds that it's going to happen, and I'm going to go into that later in this session as well to show you why I believe this. Okay, I believe it because the data supports it. I don't believe it just because it sounds great. I believe it because the data supports it, okay? So remember this, okay? All right, so let's go back to what we were looking at. So they're accumulating a long position while offloading their short positions because they were just recently short, okay? They offloaded those positions. And now they're accumulating over a long period of time a long position, okay? All right, so let's go on to the next one. Where is she? Okay, oil. So oil, they've always been bullish for the longest time. They're usually bullish. So using the data to decide on what direction the banks are going to push oil is somewhat difficult. At times we get a lot of information, but at other times we don't. All we can tell is long positions are larger than short positions, okay? But they're not aggressive. As you can see, they're somewhat cooled off. But when you look at short positions, they're a lot more cooled off than the long positions, okay? Another thing is when we look at the technicals, when we look at the technicals, we can see an institutional buying zone is currently in play right now. And price dropped into it and it's just been sitting sideways at that zone. We believe that it's highly likely oil is going to be heading up higher, okay? We believe oil is going to be heading up higher. All right, so let's move on to the next. Let's get to the nitty-gritty good stuff, the dollar. Okay, so let me show you something here. So we're having a push to the upside. The only reason why the dollar is pushing up is a couple of reasons, okay? Because gold is dropping and because Powell keeps coming out saying that they're going to raise rates, all right? That's the reasons why the dollar is rallying up right now. But it's not because the institutions are accumulating a long position, okay? I could tell you that. Because here's what's going on with the positions. Since last year, look at that, in August, okay? Since August, all right? September, August at the highs. Let me just show you something here. Members will know that we were calling a top here in the dollar when it came into this area. US dollar Japanese yen was also entering into a significant selling area that we located on the charts. And we knew that it was very likely they're going to start taking profits on their long positions, which would fuel a move to the downside. Okay? Look at what was happening here. From 50s down to 30s. Okay? That's profit taking on long positions. Look where we are now. As of January 31st, 29. Okay? 29,000. That's the end of January. That's down here. So what have they been doing all this time here? Have they been focusing on accumulating a long position? No. Their focus has been taking profits on long positions. So they're just finishing offloading a long position. Now price is rallying up. Do you think they're focusing on accumulating a long position? No. So why are a bunch of people on Twitter posting that we've got uptrends on the dollar? That the dollar strength is going to be amazing. Oh, watch the dollar. You know, they're going to continue to increase rates. The dollar is going to fly. Should that be anybody's focus right now? When coming to these markets and trying to determine what we should trade? Should our focus be on buying the dollar? Absolutely not. I don't want to be buying the dollar unless the banks are buying the dollar. The banks are not buying the dollar right now. What I can see up until January 31st is they were accumulating a short position. Okay? Now, the latest set of data shows a decrease from 18 to 12. That's right here at the bottom. Okay? Closing short positions that they accumulated on the way down. So let's let this rally up. Let's let it do its thing. Because I'll tell you right now, the reversal on the dollar is going to be timed with gold. We know gold is hitting a medium-term buying area, but we don't know if the banks are going to use it to propel price higher. Because then we also have the monthly chart, which could allow price to drop a little bit further to its monthly buying area, and then that's where they could start accumulating. I'll tell you one thing though, wherever gold reverses, the dollar is going to follow suit. So I would not be focused on buying dollar at this point, okay? Not interested in that. Okay, so let's look at the Aussie. So Aussie rallies up. Look at shorts. They're somewhat aggressive. You know, this has been a theme with the Aussie for a long time now, where the banks increase shorts, decrease shorts, increase shorts, decrease shorts. And this increase and decrease of shorts is what's moving the market primarily. And this latest string was closing short positions, okay, which causes a rally up. Incredible. So that's what happens, right? You flood the market with short positions, it causes the market to drop. You close them out, it causes the market to rally. And that's what's happening here. USCAD. So the USCAD, we're seeing a slight push to the upside. Longs were more aggressive than shorts. We're seeing this push to the upside take place. Okay, shorts are cooled off right now, so they're not focused on shorts. But remember what I said, oil to the upside, right? So if oil gets stronger, what do you think happens with the CAD? Okay, it gets stronger. So watch for signs in the next coming weeks of the data showing strength in short positions heading higher. US Swiss, not much to see there. Euro. Okay, they've been very aggressive with long positions. Look at their longs. Look, 246. Okay, you see how close they are to their maximum size? Maximum large size positions is 266. January 31st, they're at 246. So what do you think happens when you reach 246? You got to take profits. So what do you think happens when you reach 246? You got to take profits because you're so maxed out. So what happened? Okay, this is profit taking. This move to the downside is profit taking on long positions. Okay, so anybody's saying, oh, there's a downward momentum here, downward trend on euro. No, there's no downward trends here. This is profit taking on long positions causing a move to the downside. Okay. So watching for this. because the dollar, like I said, down, this is likely going to go like this. Okay? So what will have to happen? So again, let's look at the dollar. It's moving up. Gold makes its reversal. This will move down with it over time. As for euro, makes its drop. They're going to have to close out a significant amount of these long positions, okay, before some kind of momentum. So I suspect we likely see something like this, okay? It's hard to tell because there's no trends, no nothing. This is just pure momentum fueled by the closure of positions. It's one of the toughest times to dictate where price is going to move because this is happening live time and we don't even have the latest data. Okay, so it's very difficult. I know the context of what's taking place, but to know exactly how much it's going to fuel and move to the downside is extremely difficult. Okay, but this is what I'm watching for. Pound, similar things happening. US dollars, Japanese yen, rallying up from our buying area, as you can see. Both longs and shorts are cooled off, so there's not much to glean from that. But here's the one that I want to point out, okay? This is the S&P. This is the S&P. This is showing you what the big speculators working for the banks, what they're doing with their positions. Look at longs. What color are those cells there? Blue, cooled off. Look at shorts. What color are those cells there? A tinge of red, meaning they're focused on them. They're focused on accumulating shorts. Okay? That's what their focus is on. Now, as of January 31st, their position was 95,000 above average. Okay? Now remember, this is within the context of this move here to the upside. And you have Kramer coming out saying we're in a bull market and all this sort of stuff. Okay. But there's no proof of this. As far as we can see, their focus has always been on short positions. Okay, as far as we can see back here, look at this. June 28, last year. So all of this price action here. Okay, from 77,000 up to 103, they're manipulating price using the accumulation and distribution of short positions. Accumulate to 103 back in September 13. That was contracts expiring. And now we're at 95. Okay? So all I see is focuses on shorts. I don't want to go long. All right? My bigger picture is short on the market. So this is why I'm saying that there could be a crossover of the correlation from being negative to positive with the dollar and the S&P. Because could there be a move to the upside? Sure. Absolutely. Okay? Anything can happen at this point. There could be a move. This is a buying area that price is reacting to. So could there be a move to the upside? Sure. Yeah, we could. It can come all the way up here to this area of supply before we see a drop. Anything can happen. There's nothing solid to give direct movement and momentum within a certain time frame. Okay? There's nothing to see here in terms of that. All we know is the CFTC data is telling us they're focused on shorts. All right? So I'll be watching this area because if this area goes and breaks through, then it could just start dropping right now. Okay? That would be one of the key signals that I will be watching for. Okay? Then we have the Nasdaq. What is currently in play right now on the monthly chart? Institutional selling area. Okay? This is an area where the banks were selling. Okay? And what do we see with their data? Focus of attention is on shorts. At the end of January, they were getting a little bit more aggressive. Look at long positions. Are they blue? Yes, their coloration is blue. That means they're cooled off. They're not focusing on longs on the Nasdaq. And price is coming into a selling zone that we located here. So what's the bias? The bias is downwards. Downwards we go. And according to this Nasdaq chart, it's downwards and it's not going higher than the previous high that we just reached up here. That's what it's telling me. Okay, so I'll keep that in mind as well. And last but not least, Dow Jones. Look at the focus. What's the focus on? Shorts or longs? Shorts. Aggressive. Okay? Cooled off. Look at long positions. Cooled off. They're not even focusing. So you see the picture starting to be kind of clear for us of what is likely going to take place. Again, we're not guessing on what is probably going to take place. We're looking at the data, and the data is telling us what's taking place. And based on the data, it's giving us an idea of what is likely to come. Okay? All right. So that is a brief chat on the positions. Let me see your comments here. Hello from Netherlands. Hey, what's up, man? Why is Gordon angry? Because investors are betting on the dollar rallying, but they're going to get a rude awakening very soon. And they're going to be like, what the hell is going on here? That was what that represented. The pissed off investor that listens to Wall Street Journal and is flabbergasted that price is coming to an end and dropping. Even though Powell has been coming out and saying, oh, rates are going to increase. And then all the data comes out positive, right? All the data is coming out positive for the dollar. The employment data. So that's what I believe is going to happen, because that's what the data and all the evidence is suggesting. Okay, hi from Berlin. Does that mean oil would head lower? No, I think oil will head higher. That's what I'm seeing. Okay, I think oil will head higher. That's what the chart is showing me. Okay, the data is not strong, like I said, but that is showing me that. Nat gas is telling me it wants to go higher. The energy sector is telling me it wants to go higher. It hasn't given me the signal yet, but it's very strong. And when it gives me the signal, I'll let you guys know. But that's what I'm reading. That's my read. That's my take on all this. Okay? All right, folks, that's it. I'm going to let you go. It was fun. It was entertaining. I hope you got something out of it. If you did, hit the like button for me. I'd appreciate it. That's how you can show your support. I would appreciate it. Take care. Enjoy the rest of your day. Remember what we talked about. And let's just sit back and watch things unfold. All right? Take care, everyone. Have a good one. Bye.